Hi guys, thanks for tuning in to another episode of Nuggets News. We welcome back our friends from Santiment. So how you going, Brian?
It's going great, Alex. Thanks so much for having me. I'm excited to dive into some of the metrics that we're seeing right now and show off some of the on-chain and socials that are really kind of being very good representations of where the markets have been heading over the past couple of weeks. So looking forward to diving
Absolutely.
in.
And you've got a few new whale metrics and stuff we're going to look at today. So I think the market is at such an interesting point. And hopefully, I'll probably share this straight away because it is time sensitive stuff. But I'm looking forward to diving into it. I guess overall, everyone's waiting for another move higher. I guess you'd say is the sort of general consensus. But we have seen people being like a little bit cautious in that in your data. We're definitely not euphoric, even though we're just sort of sitting here at near 60K.
Yeah, we've definitely seen some contradicting social metrics right now. For example, one thing I'll show is our weighted social sentiment metric, which will show the amount of volume in terms of Bitcoin and Ethereum being discussed at any given moment, and multiplying that by one of our proprietary algorithms, which shows whether those comments that are existing right now are on the positive variety or negative variety. And right now, it's showing much more negativity than you would expect when we just, 2 days ago, was it, or 3 days ago, where we just crossed 60K again and got rejected. And now all of a sudden, everyone thinks we're just going to fall back to 30 or below. So it's pretty crazy right now.
And that's really important. One of the things we teach is like sentiment and psychology, like literally being the most important thing, I believe. And as Brian says, when everyone is negative and really doubtful, it leaves room for investors to cross from one side of that boat to the other. It's no good when the herd or everyone's on one side of the boat and they're agreeing. So that's the
Right.
ingredients for a healthy move higher. So I'm just going to show this one screen quickly that we just spoke about before. So you won't see it, Brian, but is there anything in particular you wanted me to show people on this screen that you guys have got?
Yeah, I mean, you're probably looking at the 24-hour screener right now, which is showing that it's mostly a red day over the last 24 hours. We have a few altcoins that have shown a bit of a surge, but for the most part, other than Bitcoin Diamond, I'm seeing. What is another
We've
one
got
here?
Theta, Solana, all the kind of Hex. There you go.
Right. Yep, Hex is doing well. Engine is one of the few ERC20s that's having a good day after Ethereum kind of got rejected from 2000 over the last couple of days here. But for the most part, things have been slipping down a little bit. And I can go over a few reasons why we're seeing that happening. But yeah, in general, for those who don't know, most assets are going to be fairly pegged to what Bitcoin is doing. And there
Yeah.
are going to be exceptions to that. But when Bitcoin is up slightly, it usually means altcoins are going to go up a lot more in the short term. When Bitcoin is down, you'll see a lot of these altcoins like they are now in the red zone and not doing so hot.
Yeah.
And if you can, Alex, you can click on that 24H button that you should be seeing on your screen, and that should switch it to 7 days.
Yeah. Fantastic. And I definitely noticed like a bit of a gaming coin theme with those coins that are red. And some of the research that I'm planning on doing is looking at these like indexes and baskets that have been created. And so when people are all bullish on like a gaming theme and money flows into these sort of indexes or DeFi baskets that are available, that's something that I think we're going to see more of going forward, Brian. A little bit off topic, but yeah.
No, yeah, I agree. I agree. Yeah, we make watch lists now that will actually show what like a lot of those large groups may be investing in together, and you can very often see a lot of patterns when it comes to like the Pantera Capital portfolio, which we have a watch list for. In fact, I'll link it to you right now in our chat.
This was the
And
X.
you,
Someone else asked me about that yesterday. 7 days, it's up 400%. Is there new
it's
rules out
crazy.
of India that they're reopening crypto or something?
I have not heard one way or another. I don't want to give any misinformation there, but I do know that they've had wild success right now, and that won't last forever. But where you'll often find when these big funds open up and start going mainstream, there will be heavy success, and any asset that's in part of their basket will very often go up in unison, just
So
because it's kind of a self-fulfilling prophecy in the beginning.
yeah, I'm just going to bring that up quickly because this is one that that I love. Like this is the Binance of India, basically. This is one that I've been bullish on, and then all of a sudden it's no, that can't be right. Anyway, we'll look that up later. But no, was EX top performer there? I'll stop waffling on, and I'll let you start sharing some of your metrics, Brian. But what do you
For
want to
sure.
show us first?
Yeah, and by all means, anytime you want to interject and talk about some stuff that's going on in the markets, I know some stuff based on our news that we discuss on our insights page, but I'm a student of the game just like anybody else here. And my job is going to be to share as many interesting pieces of data-backed information as I possibly can share here in our 30 or so minutes where we'll be talking, Alex.
Cool. Yeah, like I said,
So
let's whip through as many as we can.
absolutely. So what we're looking at right now is basically our Santrends page where we will aggregate all of the common crypto terms and assets that we have programmed for to track under our platform. And it will show which ones are getting the highest degrees of uptick in terms of discussion rates compared to their usual norms. You can see here, for example, TKO with their recent involvement on Binance. They've really been exploding. Binance coin itself recently had its all-time high, so they're very high up there. XRP, of course, has also done really well price-wise, for example. The term buy, interestingly, is in our top 5 right now, and that's usually a bit of a bearish indicator. Between buy and sell, whichever term tends to be getting a little more of a rise, the opposite tends to come to fruition. As Alex alluded to here at the beginning of the call, whatever the mainstream consensus is, the opposite will occur more often than not. The markets in crypto tend to move away from the crowd consensus with tremendous consistency, which is why even though crypto is a zero-sum game and it may seem like we're all in this together, there are always winners and losers and people who are leveraging longs when price go down and leveraging shorts when prices just surge. And there are liquidations all over the place that you don't hear about. And most of the people on this call, I would imagine, are of the longing variety and looking for long-term growth in crypto. I know that myself and Alex are proponents of that, with our businesses being tied to the success of crypto. But long story short, when you see something like buy in our top 10 rising trends, it means that there's kind of a growing consensus that, you know, a dip like we're kind of seeing now. I'll even just zoom into the last
I
week
would
here.
probably just add that with the one exception of extremes. So obviously when everyone's tweeting buy and it's going parabolic near the top, or when everyone's tweeting, oh, it's so bad and it's a bloodbath and it's going down, you know,
Right.
at those extremes, it's probably a bit of an exception. But I agree that, yeah, definitely in the middle, it's the opposite of what tends to happen. We see that in the gold and silver markets with the commitment of traders report all the time as well.
Totally. And you're right 100% about the extremes. What I would say as an asterisk to that is even on the extremes, you'll usually see that the crowd can push things up if they believe that prices are going to go up for the very short term, and they will push it down if they believe, you know, something like XRP with the SEC lawsuit that happened at the turn of the year. The crowd basically sold off in masses, and that caused the price to go down. But eventually, there was so much FUD involved that people were leverage shorting and ended up getting liquidated by those larger whales who decided it was time to scoop up a bunch. And the mass expectation eventually ended up getting wrecked, as they say, because that's when the long-term stretch, a sustained period of people being too bullish or too bearish, generally ends up getting screwed over a bit. And that's kind of what we see in the long term, even on extreme scenarios. So for example, I'll zoom in here just a little to make this a little more visible. You can see here, this was the highest spike back on April 3rd. There was just a huge spike in buy calls.
Oh.
So yeah, as I was saying, the largest spike over the last month, or sorry, the last week here, was back on April 3rd. Looked like my morning, your evening over in Australia, Alex. there was a huge call for buys between all of the platforms that we track. Basically, public chats on Telegram, Discord, Twitter, Reddit, and then pro traders chats that we also follow. We aggregate all of the buy calls, and we had this huge spike here. And look what happened right after the buy calls. There was a very, very short-term spike here, followed by just an absolute free fall. So that's exactly what I'm talking about. When the consensus gets too high in one direction, the opposite tends to occur.
And do you have that as an alert that you, or like a certain level that you look at, or alerts in that?
Yeah, you can go here to alerts, and you can actually be notified anytime any word gets trending. I haven't done this in a while. Let me see if I can find out.
No, that's all right.
How I've done it in the past.
Just for everyone watching on at home, this is the kind of stuff that, like, big picture, with collective shift in the platform that we're building. Next step is the app, and then next step is integrating like push notifications with stuff like this. So this is my master plan, working with all these awesome data sites.
Exactly. I think it's a really revolutionary thing that traders can use to their advantage to find exactly when it's time to react against a whale accumulating a ton of Bitcoin or Ethereum or any other asset, or you just see a word like buy enter the top 5 on our trends as an indicator that it might be time to sell, and vice versa. So you can program them all in here and then get an alert through Telegram, through SMS notification, or through email. And it's pretty fancy. You can make it a public alert that you can share with other people on our platform, or make it private just for you. And you'll even see over the last 3 months the amount of times that alert has occurred, so you know whether your phone is about to go off every 15 minutes, or whether it'll be kind of spread out as like an extreme scenario.
And then the data crunchers can go in there and back test and see what would have been best. So yeah, I love where all this is going.
Yeah. So interesting to see there on the trend side of things. I'll hop into this here also to show. This was a back test that we did a couple of months ago, right around the last time we spoke, Alex, to indicate that anytime an asset hits the top 3 on that social trends page against our algorithm that shows that there's a huge % rise in discussion, that generally signifies that the top is very close to or has already occurred. Because when there's crowd discovery and something like XRP, for example, has been surging, I don't know what the exact percentage is, something like 40% in the last 2 to 4 days.
Easily.
Yeah, if not way more. Sorry if that percentage is off, but I know that it's been skyrocketing. And when that happens and you see it in the top 3, you'll generally see it as a top indicator. And over the next 12 days, in this case, I think it's 20 days, where we measured that it goes down about 12% over those next 3-ish weeks or so. And that's again, aggregating. Yeah, go ahead.
Yeah, I was going to say XRP has doubled in a week, and this is the self-fulfilling prophecy that Brian's talking about. So if you literally, guys, one of the things we teach is think about who's on the other side of the screen. It's a self-fulfilling prophecy when the majority of people, it's climbed the ranks of what everyone's talking about, and they're buying something, then mathematically it only leaves room for more people to become sellers than buyers, and then it drifts down, and that's the profit taking we see. So that's the visual representation of that exact thing playing out.
Exactly. Yeah. Well said, Alex. And I'll even show this metric, this first metric I want to dive into on our Sandbase platform, really lends into that. I'm going to show you what's known as the BitMEX Perpetual Contract Funding Rate, which you and I were talking about right before this call, Alex. And it's a commonly known metric, which you can get anywhere. But we've built a tool to kind of be able to combine, compare, find many different opportunities that lie within this metric, so you can find which ones are sky high and which ones might be more of an opportunistic play. Right now, we can look at BitMEX's perpetual funding rate here, which reflects when there's an extreme in the amount of longs happening versus shorts, or on the other end, which doesn't happen as often, shorts being much more than longs, which we actually just had actually about 6 months ago to the day, we had the biggest shorting going on. which,
Yeah.
as many of you may expect, that signals the time to buy, and vice versa. When we have these huge spikes with longs overshadowing shorts, it signaled that it was time to sell because we had a free fall right after.
Um, so BitMEX has, I guess, become like less influential. Are you familiar with viewbase.com? And do you guys have plans to like look at the other funding rates
Oh yeah,
available now?
we will definitely be integrating all of them very soon, and we'll
Cool.
actually try to aggregate them on average so we know what all of their funding rates are combined.
Ah, perfect. That's exactly what I wanted to hear, Brian.
Yep. So yeah, long story short, I mean, BitMEX just right after it hit 60K, we had this huge spike in BitMEX funding rate that kind of signaled that we were getting a little overheated and too many people were uh, giving indications of a characteristic known as greed, right? And we don't want to see greed in the markets, as it will very often be the time that many people are about to get wrecked. And that was kind of what happened. You know, we haven't like free fallen or anything, but we did go from about 60K to 55K in about 48 hours. And
Yeah.
until we see BitMEX kind of flattening out, as it's starting to now, we'll kind of continue to see people that are leverage longing getting punished.
Yeah, I'm just looking across the board now at some of the other sites, and you're right, it's nearly reset. So that is a sign that maybe we've had that little bit of a washout we needed.
Right, right, and that's good. I mean, if it's a little bit more sustained like this for a period of multiple days or a week, that's going to be a clear indication that people are now a bit fearful and aren't being greedy anymore. And that's the time that you want to get back in. Based on history, obviously, this is not investment advice, and it's not always going to play out perfectly. As you can see here, for example, like the price was still able to rise as plenty of leverage longs were happening. But eventually, with too many of these spikes, people will get punished. And that's kind of the lesson that we try to instill when it comes to using funding rate as an indication.
Absolutely. Let's keep moving through some of these metrics.
You bet. So the last of the important social metrics that I'd want to share would be our weighted sentiment metric. And I'm going to remove everything on this template except for Bitcoin, Ethereum. And link go away too. Give it just a moment to load.
Yeah. So
All
Twitter,
right.
like
So
I know you got like some people joke at Twitter, but I do think like I know you guys base a lot of your data on Twitter, but I do think like literally we joke about crypto Twitter. That is where the buzz happens, the conversation
oh
happens
yeah,
for the most part, and that'll change in future. But for the time being, that's where the sentiment, I guess, is derived from for most people. And even if you're watching YouTube, they get the information and you see them share tweets and so on. So it is important.
100%. Yeah, it may seem like Reddit and Discord and even Telegram have just as much traffic and commentary on the markets as Twitter, but the reality is it's really not close. Twitter is still the most influential of all the platforms. Um,
Engagement, yeah. Yeah.
yeah, and it's the one where we really program these metrics to be applicable for, which is why when we really try to get a fair gauge of how things are looking, we always try to program it specifically for Twitter as opposed to just all of them combined,
Yep.
because it has the most correlation when it comes to sentiment here. So looking at Bitcoin here in yellow, this is basically measuring the amount of volume that Bitcoin is having at any given time, multiplied by the ratio between positive and negative commentary. So it kind of combines two key metrics to give us an accurate indication of just how greedy or fearful the market is at any given time. And long story short, on a public facing perspective, since the funding rate is a bit more private, people have been much more fearful and outspoken about Bitcoin potentially going down, which is actually a good sign. It means that there's a bit of crowd fear that very often ends up fueling the markets, because when we are under the average amount of normal expectation for Bitcoin to go up or down, it's a sign that people think that we're going to go down. And as we've kind of talked about already on this call, when people in large quantities think that a price is going to go down, it will more often than not go up. So this is a little what's the word? I guess contradictory to what we just saw with the BitMEX funding rate, where we had that huge spike. Bitcoin has been down basically for about a little over a week now. I'd call that 10 days or so. And that's a positive sign. Ethereum here, as I highlighted in red, we're at almost a 6-month low in negativity. People are very, very concerned that Ethereum won't be able to sustain its price over 2,000, at least for the short term, for reasons related to, miner balances fluctuating, average fees being very high, all sorts of things that are concerning to people.
Yeah, I definitely think gas prices and people are looking at, Binance Smart Chain as, a better alternative or whatnot. But maybe that just suggests that some of the leveraged traders are a bit of a different crowd to the sentiment on Twitter. But I guess, like always, you've just got to use each of these little data points to form an opinion with everything else that we're seeing.
Exactly. Like what I'm doing on this call is showing the 5 or 6 most important metrics that we use regularly to make our insights. And when we combine them and see that 5 out of those 6 are bullish or 4 out of 6 of those are bearish, that's enough to kind of convince us that the markets are likely going to lean one way or another over the next, at least week or two. And we talk about that on our Friday This Week in Crypto calls as well, if people are familiar with those. But yeah, looking here at the average and median fees, we can see very clearly that there's been a long-term rise, and we're still sitting at about $18.75 for the average Ethereum transaction fee right now. And this is a big concern for people, and the reason for a lot of the doubt that's going on. I mean, if we look back 6 months ago, the average fee was sitting at $1. Let me get the hover right, $1.96 for comparison.
I remember when it was 1 cent, or less.
Yeah, the good old days. So yeah, the average fees and median fees, always something you can check out on the platform. I also want to show off whales, which I think are always fun to look at.
One thing I'll just add with the fees, again, thinking about who's on the other side of the screen, if it's $20 or $50, $100 to do a transaction, it just excludes thousands or millions of retail investors that could pile in to Uniswap and buy shitcoins if it was a cent.
Oh yeah.
They're just not going to do that if it's $100, and so it stops that money. So that's just another way to think about that.
Exactly. The reason fees being low is a good thing is it leads to more utility. If fees are causing hesitation for people to move their funds or transact with others, it's generally a bad sign, because you're just not going to see the maximal amount of utility that you would see otherwise. Imagine if US currency or Australian currency came with like a charge of 10 cents on the dollar every time you wanted to pay someone. People would just hold on to their money more and not use it. And we don't want that. We want to see that crypto is being used on a regular basis, because that's what ends up pushing the price up more and more over time and gets us closer to mainstream adoption.
And so maybe in a future episode, I'd be interested to see when words like gaming come through and we see all the gaming projects boom, and then something like scaling becomes a really hot topic, and then we'll see all the scaling related projects. And I think this has already maybe happened in the past from time to time, but that's where like narratives start to trend, and then people go, oh, how can I get exposure to that narrative, that theme? And then those projects start to trend, and that's something that we've seen this year, really, isn't it?
Big time. Yeah, some of those gaming tokens right now have just absolutely ascended. So what we're looking at now is the whale. Basically, there are 4 different tiers we're looking at. The gray, the brownish that you're seeing on your screen, is the smallest addresses that hold anywhere from 1 Satoshi to about 0.1 Bitcoin. The pink is 0.1 all the way up to 10 Bitcoin. And then the red is 10 to 1,000, followed by gold, which we deem the whales, who are holding 1,000 or more in their addresses. And over time, what this graph does is show just how many of each of those addresses there are at any given time. We can see, we most commonly use the gold line because that's indicative of what the whales are doing, where there have been anywhere from 2,100 all the way up to close to 2,500 over the last 6 months. And there was a huge peak right before we hit that first all-time high on February 20th, followed by that rebound where we got a bigger all-time high. But notice that ever since about February 7th or so, we've seen a pretty big drop in the number of 1,000 plus Bitcoin addresses, going from 2,489 on February 7th all the way down to 2,233, which is give or take, if I'm doing the math right, what's that, like an 8% to 10% drop around there? And now we're sitting at about 2,246. So still quite a bit of room to recover in terms of the amount of whale addresses that existed just 2 months ago.
Yeah, and that's one of the reasons why even at the time when we were hitting, that's sort of 50,000 there, and the whales are starting to take profit and sell into that strength. But I guess it's kind of almost a good thing that we've seen a lot of that selling. It looks to have tapered off, and we've seen the miners are the other ones that we saw that big selling, and now it's tapered off. So the people that wanted to take profit and needed to take profit, maybe that is behind us now, and that gives us permission to have this next run higher. I think that's kind of what's setting up big picture.
I agree 100%. I mean, it's hard to speculate, and I don't want to get into exactly what's going to happen just based on one metric. But it's very clear that whales have their own agenda right now. And if I were to zoom out here, I'll go to like the last, say, 3 years. You can see just how much this gold line has really reflected where the markets will go. When we had, let me see if I can zoom in on 2018 here. So when we had this big drop in 2018 and we were coming off that big all-time high that occurred in January 2018, we're sitting here about 8 or 9 months later. Notice how the gold line here, as it was dropping, did not really mind. They used this opportunity when we started to get to 4,000 and below as a way to really pump up their numbers, going from about 1,780 in November to just 1 week later sit at about 1866. That's a huge jump that, many, like the tan lines, even the very smallest addresses, they were dropping around this time because a lot of people were saying, oh, I guess Bitcoin's over. I don't want to touch that. But the whales who had been around.
It's just such a clear case of there's blood in the streets, retailers selling, whales are confidently accumulating, and then, like you say, a couple of months later there in Feb, it just starts to spike again with whales really buying 4,000 level hard.
So yeah, this gold line here really foreshadowed that we would be able to rebound eventually, as they just did an unbelievable amount of accumulation during this 5 or 6 month span here that we're showing back in 2018, 2019. And even just like looking at all time, going back to when we started getting these metrics, look how there's just been more and more and more of these gold lines here. And when everyone was really starting to ascend here in 2017, notice that the gold line was starting to flatten out and go down even to indicate that we were starting to get into that bubble area around the turn of 2017 to 2018. And then as soon as we dropped, guess which line was picking up steam the fastest? So they really are a reflection of where the markets will be heading, given enough time for things to kind of even out. It's not the kind of metric where you're going to see a bunch of whales accumulate and then the next day the price picks up. But over a span of months, it will very often be the case.
I'm going to screenshot that right now and put that out on Twitter, I think, Brian, because I've never seen like this exact one like that, and it's just the perfect representation of the retail piling in as whales are selling and that mark the top.
Yeah, I think it's pretty cool too.
Awesome. Cool.
All right, so what else? I can also show our development activity metric, which I think is really cool.
That is one that we've spoken about a lot in the past. Okay, guys, we've got my screenshot, and that has ended the stream as well. So we'll pick it back up, and Brian, you've got some whale transaction counts for us.
Absolutely, Alex. So yeah, we're looking at the amount of whale transactions over time, over the past year for Bitcoin. And we deem whale transactions to be any transactions on the network that are over $100,000 US dollars in value. And it's a great way to kind of adjust between what the price movements are, because you'll often see trading volume based on very different Bitcoin prices over time. And trading volume might not give you the full story, but what this does is it'll cut through and do that automatic calculation of whatever the price is at a given time and tell you how many massive transactions that are over $100,000 have occurred over time. And it's very clear what pattern we're seeing now. As the price has grown for Bitcoin, the amount of whales and just large transactions in general have grown substantially, where we were sitting at, anywhere between 2,500 to 3,000 whale transactions a year ago, which was just a month after Black Thursday occurred, where Bitcoin's price was cut down to like 3,500, to now being, it got to a high of 16,476 whale transactions on January 7th when Bitcoin really topped out. So it was very likely that these whale transaction spikes here were indicative of a top because they were selling. And then we've kind of flattened out ever since, but we're still flattening out in a very healthy number compared to where we were a year ago, where there are just many, many more whales involved, and large transactions that we've never really seen at this capacity before. Yesterday was a really big day where we had 13,740 whales making transactions. And that's really a massive number and something that you can keep in mind when it comes to any asset that you want to track and see how involved those upper echelon whales are being at a given moment.
Yeah, fantastic. Definitely something that we've just proved the importance of watching what the whales are doing, I guess I'd say.
Precisely. Yeah. And to top it off, I'll show our development activity metric here, if I can pull that up really quick.
Now, this is one that I love and we follow closely, and you guys do the reports on as well, for looking for the, I guess, underground projects. So if something's in the top 10, or in the past we've even seen things like top the list, but they're projects that people aren't really talking about and there's no buzz, that presents really big opportunities.
100%. Yeah, we're looking here at Bitcoin's amount of GitHub submissions over time, and I'll get to it in a second. But as Alex alluded to, we can look here at our top 10 DeFi busiest, aka top developing projects that happened in March. So looking at our data from March 1st to March 31st, we were able to identify which projects were seeing the most rapid growth in terms of their coders, aka their GitHub submissions. And Alex noted that in previous discussions he's had with you guys, he's gone over exactly how we track GitHub submissions. It's not just the total amount, right? Because we want to weave through the ones that really don't matter or are just kind of standard uploads or non-notable types of GitHub submissions. And we only show the ones that are really reflective of innovation and progress over time. And we have an algorithm that kind of does that to show which ones are truly getting the most development over time instead of just the raw number. And we can clearly see here, UMA was the top developing DeFi project. We talk a little bit about what they've been working on because we will reach out to them about a week before we publish this report every week, and they'll give us a quote telling us what they've been active in doing, which is really fascinating and gives you a lot of insight straight from the source because they're quite open to share what kind of tasks they've had in mind.
Yeah.
Pancake swap here. Go ahead,
I was going
Alex.
to say, if you go back to that list of the 10, just about all of them are involved in the trading of altcoins or synthetic assets somehow there. And that shows you what's happening at the moment. It's alt season, and just look at all these, Augur prediction markets. Radix is one that's a bit under the radar, like a scaling high throughput project. But just about everything else there is, cross-chain liquidity, dexes, synthetic assets. So that's definitely a sign of the times.
Absolutely. And more than anything, this development activity metric is a great way to instill confidence. If you are a long-term holder in the kind of asset that is consistently showing up in these top 10 countdowns, whether it be for DeFi or another one we do is F-based, which will come out shortly, you will be happy to know that those that are directly invested in the project believe in the project for the long term and are actually actively working. If we had these kind of metrics 4 years ago for an asset like Z Classic, for example, one of those that had that big fork and then it immediately dropped off a cliff for those who were around back then. You may have seen that there was almost no activity going on for it. And that would be a good warning sign that it may not be one that has a lot of long-term viability.
Whereas I'd be very interested to see, let's report back in on Thorchain next month. I've got that ChaosNet coming up. Not a lot of buzz about that just yet. And something like Radix as well, as I mentioned before. So they're the things that I'd be interested in and say that they're probably likely to outperform the general market when there's something that's got a lot of activity, a milestone coming up, but there hasn't been a lot of buzz on crypto Twitter and YouTube yet. That's the things that I think are favorable.
100%. Yeah, I just wanted to pull up their metrics right here on Sandbase to see how they look over time. And they've been fairly flat, but keep in mind, we're comparing this to the number one asset, Bitcoin, which is always going to have a pretty high development rate. But over time, like if we looked at the last 3 years, you'll see that, here, I'll get rid of Bitcoin here for a minute. You'll see that both Thorchain and Radix had large growth right when they really started to get off the ground about a year ago. And that's what you want to see. You want to see an overall ascending amount of development as they're expanding their team rather than descending, which might mean that their coders aren't doing as much as they used to. So there are, meme coins out there, for example. I won't name any for objectivity reasons, but there are lots of assets that just don't have a lot of development activity, and they'll have these huge spikes out of the blue where, social volume might just collect, the crowd will collectively decide to push up the price, but it's based on nothing because the asset itself is not developing or innovating in any way.
Like when Elon Musk tweets about Dogecoin.
That would be an example of a time where the price went up pretty inauthentically, and it
not
had
based
nothing
on
to do with the development
activity, you could say, Brian.
Precisely. So it's a great metric, in my opinion, to get validation more than anything on the kind of metric that you're holding for the long term and whether it's a viable one to kind of tuck away in your wallet for a long time.
Cool. Well, I think that's most of the things you had on the list for us today, Brian. Is that right? Or have you got any final
absolutely.
thoughts?
No, this is a good stopping point. And of course, we can touch base again in a month, and I'll give you guys another recap on what's happening in the markets.
Cool. I'll just exit screen share there. But as Brian mentioned, this episode, guys, I want to take it in whatever direction you'd like, and you're going to find most engaging and informative. So if you want like a maybe 10-minute style top 10 and let's compare each month, or if you like the deep dive, the longer discussion, spend 5 minutes on each metric, that's fine. But the guys also do their weekly deep dive, which I watch as well, over on their channel, which I'll link down below. So yeah, give us some feedback on what you're going to find most informative. Members, be sure that you're checking out the actual research reports that we're doing with the guys here. In Collective Shift, it's under Research Reports tab, or just search for Santiment now that we've got that global search function. But other than that, Brian, thanks a lot. I love it. I love all the data. I'm sure the guys do as well. And we'll have to catch up again next month.
Absolutely, Alex. It's always a pleasure to catch up with you and love what you guys are doing. I really hope your audience are enjoying all of your content as much as we do here at the Santiment team, and using both your content and our data-backed content. It's a pretty good combination for those who are really trying to improve their trading. So we encourage you to check us out if you haven't already.
Yeah, and if there's any like metrics that you want the Sentiment guys to do or whatever, like they're always just as open as we are. So let us know in the comments. But otherwise, we'll see you again next month. So cheers, guys.
100%. Thanks so much, Alex.
No worries. See you, mate.